Did you know that two workers in the same factory can be paid completely different, even for the same job? Ever wondered how companies decide wages and control labor cost? In this video, I'll break down employee cost, wage calculation methods, and exam focused problems.
Welcome students. In the previous class, we went through the material cost aspect. Now the second element, which is again important, is the employee cost. Let us see what employee cost, how to calculate it, what are the accounting treatment of it. And from examination point of view, one question is guaranteed from employee cost. Let us see. So employee cost is also called as labor cost. So when it is direct, that means it is directly in the production, it is called as a direct labor. And if it is an indirect, where like stores, account, HR, quality. So such type of labor costs are indirect labor cost. So this is the basic classification between direct and indirect. Let us understand the principles of employee cost measurement. That means when there is an employee cost, what all should be included, what should be excluded, all these are understood through cost accounting standard 7, CAS 7. So what all it should included? Gross pay. That means your basic plus DA is included, and other allowances, if there are any other allowances like travel allowances, conveyance allowances, that will also be included. So this is with respect to the gross pay. Second point is bonus. So bonus and any grants, they also are treated as part of employee cost, so they should be included in direct labor. Remuneration payable will be considered as part of employee cost. So remuneration is the cost of travel for business work, so such costs are included. Next point is separation cost. Separation cost means in some companies there will be a voluntary retirement scheme, so the company will give huge amount for the people of 50 and above ages to retire voluntarily. So they have to pay this huge amount. How that will be considered in employee cost? It shall be amortized over the period of benefiting from such cost. That means if a 50 lakh amount is paid as a huge separation cost at the age of 50, so for remaining 8 years, so the 50 lakh will be amortized. That means 50 lakh divided by 8 across next 8 years. That is what cost accounting standard says with respect to separation cost. Next point is cost of idle time is ascertained by idle hours multiplied by hourly rate. So we will separately see how the idle time cost is considered. Exclusion. So what are not part of employee cost? Any abnormal cost, any subsidy, grant, incentive. For example, the government may give a subsidy or a grant for startup. That means they will say 20% of your basic pay we will give as a subsidy. So such 20% should not be included in the employee cost. Similarly, you have grants and incentives, they should not be part of employee cost. Let us see one problem to calculate the employee cost and cost problem. Let us read this problem. X, an employee of ABCD company, gets following emoluments and benefits. What are the emoluments? He has basic pay, DA, bonus, other allowances, and employer's contribution to PF. Other than that, what all detail they have given? X works for 2,400 hours per annum, out of which 400 hours are not productive and treated as normal idle time. Effectively, he is working for 2,000 hours only. You are required to compute the effective hourly cost of an employee X. So to calculate hourly rate, you need two detail. One is total cost, second is total hours. If you divide total cost by total hours, you will get the cost per hour. Let us solve this problem. So the basic pay, here it is given 20,000 per month. So 2.4 lakh will be per annum. Next you have dearness allowance. So sometimes they will give it as a percentage of basic. Here the question says directly 2,000 per month. Bonus 20% of basic and DA. So this will be the bonus. So this will be the bonus amount. Other allowances 10% of salary and DA. So next is other allowances given directly 2,500 per month. Employees contribution to PF. So this is 10% of basic and DA 22,000. 10% is 2,200. So this is per month, and per annum is 26,400. So that brings the total cost to 3,73,200. Total annual hours, we saw that 2,400 minus 400, that is the total effective hours. If you divide this by this, you will get 186.6 as the cost per hour. Next, we have overtime and its treatment. Some cases, the employees will have to work over their regular hours. So such conditions are called as overtime. So there is a law that overtime, the labor has to be compensated with the overtime premium. So that will be usually 150% of the regular rate, or sometimes it can be double the rate. When there is an overtime scenario, you have to calculate the overtime premium, and such overtime premium has to be treated accordingly to these rules. What are the rules? When overtime is worked due to urgencies, the basic normal payment is treated as direct labor cost and charged to production. What it means? Let's say the production is happening, but it did not proceed as per the plan. So to meet the customer order, now the production has to be done in overtime. This is because of the urgencies. So such overtime premium are treated as overheads. Second scenario, if overtime is spent at the request of the customer, then the entire amount is treated as direct wages and should be charged to the job. So what this second point says, customer is demanding his product earlier. So because of his request, now I have to work faster and more time to produce that his product. So in such cases, all these extra charges, which is overtime premium and the direct wages, it should be charged to the job. That means customer will have to pay for this overtime. Third scenario, overtime worked on account of abnormal condition. Let's say there was a power outage for 1 week. So this is an abnormal situation. Because of this 1 week lost, so my production team has to compensate by working overtime the next 3 weeks. So such scenarios are abnormal condition and they have to be charged to costing P&L account. So this is the treatment of overtime and how it has to be computed. Next is idle time. Idle time in a production process, there may be reasons because of this no production happens. So such scenario is called as idle time. Means there is a cost incurred, means for the hour your the wages are being paid, but there is no effective work done by your labor force. Let us understand what are the reasons for this idle time. So one is unavoidable idle time. These are nothing but the normal occurrence of idle time in the factory. Examples are traveling from one department to another department, or the distance covered from gate to his place of work, or the time between finishing one job and starting the next job, time for tool setting. All these idle time is not in the hours. Next, you have abnormal idle time. What are abnormal idle time? Breakdown of a machine, or the raw material is not available, or there is a fire, or there is a flood. Because of this, production cannot happen. So these are all not normal. So such conditions amount to abnormal idle time. How to treat normal and abnormal idle time? Very easy. Abnormal idle time is charged to your costing P&L, and normal idle time, this is charged to your direct labor. So we saw in the previous example, 400 hours was deducted from 2400 hours. This resulted in a higher cost per hour. This is called as inflated rate. Now let us understand methods of timekeeping. Timekeeping is nothing but how much time the worker is spending in the factory. So this basically includes his in time, out time, and any intermediate timestamps. Earlier, it used to be done through something called as attendance record, desk method, time recording clocks. But nowadays, most of the organization have biometric attendance system where there is a fingerprint or retina scan, or they have their access cards with RFID. So this records at what time the employee entered and exited the premises. Next, you have time booking method. While timekeeping method records the time spent by the employee in the organization, the time booking method, it focuses on how much time in that total time in the factory the worker has spent on a particular job or a particular cost center. What are the different methods? Daily timesheets, weekly timesheets. So these are all manual process where employee will sign on a timesheet saying I worked for 3 hours on a particular job, or I worked on 24 hours in this week on a particular job. So that is your timesheets. Then you have job ticket and job cards. Whenever there is a production which is starting, it comes with a job card. It goes to different station. So the employees in that station He will record at what time he received the product, then he will work on it, he will do his part of the operation, and he will again sign the out time, and it will go to the next station. With this, what happens? The job card travels along with the product from start to the beginning with recording of in time and out time at each station. So this provides a basis for understanding how much time the product has spent in each stations. Nowadays, these are handled through barcode, where the initial input material will have a barcode sticker. So the person one who's working on it, he will scan it, he will do his work, then again he will scan it, and it will go to the next station. By this, what happens? The time of this employee is booked against that product, that job, or a cost center. Methods of wage payment. This topic focuses on how to calculate the cost or the wages paid to the employee. So basically, there are two classification. One is time rate method. So in time rate method, so they will have to know hours and hourly rate. So this is called as time rate. So they will have hourly rate multiplied by total hours. They will get hourly wages. This is one. Second is piece rate method, where instead of hours, this focuses on the output. How much output is generated by a worker, and each piece will have, or each output will have, per piece rate multiplied by total pieces. It will give you the wages based on piece rate method. In piece rate method also, there are different methodologies. So one is straight piece rate. As the name suggests, it is straight piece. For example, 20 per unit, 100 unit, it will be 2000 rupees. And there are also differential piece rates. So these are found out by various economists and great thinkers during the industrial era to improve the efficiency of the labors. In the differential piece rate, there will be different zones or efficiency rates. Based on those efficiency rates, the piece rate varies. Let us start with one of the classic Taylor differential piece rate. So this system classifies whether worker is an efficient or inefficient. Let's take an example. 100 piece per hour. So they will set this as the standard. So if the output is less than this, let's say 80, then he is inefficient. If the output is greater than this, even 101, he is efficient. So based on this, the piece rate varies. So in Taylor, what happens? If he is efficient, he is paid at 120% of normal piece rate. Let's say if the piece rate is 10 rupee, so if he is efficient, he will be paid at 12 rupee because that is 120% of piece rate. If he is inefficient, he will be paid at 8 rupee per piece. Next, we have Merrick. Merrick's differential piece rate system. Here, it is similar to Taylor's. This is similar to Taylor, but there is a slight difference in the percentages. So let's say they make it as 100 piece. So if it is 100, then he is efficient. So he'll be paid at 110% of ordinary piece rate. That means he'll be paid at 11 rupee. If he is above 100% production, let's say he produces 110 pieces per hour, then he will be paid at 120% of the ordinary piece rate, which is 12 rupee. If anything less than this, 90 piece per hour, he will be paid at normal piece rate, which is 10 rupee. Next, you have Gantt task bonus plan. So this is actually a hybrid method which also uses your time rate and piece rate. If the production is below standard, let us take the previous example only. So 100 is the standard. If the production is below standard, that means if he is producing 95, he will be paid at guaranteed time rate. So that means hours into rate, whatever that is. If the production is at standard, he will be paid bonus of 20% of time rate. That means he will be paid 1.2 H into R if it is at standard. If it is above standard, if he is manufacturing 105, then he will be paid at high piece rate. So he will be paid at high piece rate. So these two are time rate. This one is piece rate. So if the piece rate is not given in the problem, you can consider 1.2 into PR and write a note that high piece rate is considered as 120% of normal piece rate. Fourth one is Emerson's efficiency system. Again, this is also very similar to either Taylor or Merrick. Only thing is there are again different bands of percentages. So let's start again with 100. If he is efficient, his bonus will be between 0.1% to 20%. Means if it is 100, he will get 1.2 times of time rate, H into R. It is not piece rate. If it is less, so as and when he is reducing his output starting from 66.7%, so he will be paid a guaranteed wage plus a bonus starting with 0.01%. So 0.01, 1%, 3%, like this. It will increase till he reaches the standard. And if it's greater than 100, bonus of 20% of basic wage plus 1% for each 1% increase in the efficiency. That means if he is at 110, so he is already getting this 1.2, that is 20% plus another 10%. So this is how immersion efficiency system calculates. So all these will be calculated through computer system and these are very complicated. Basically, these four methods are there to motivate the employees to produce more and more output. So these are all methods of wage payment. Next, we have bonus plans, bonus or incentive plan. So if the worker, if he is exceeding output with respect to the standard, how bonus is calculated, we will find out through Halsey premium, Halsey wear, Rowan, and Bath variable. His total earning will be equal to, focus on this equation, H into R. So this is nothing but time rate. So H into R is nothing but time rate. So he will be given a guaranteed time wages plus a component of bonus. How the bonus is calculated? In case of Halsey premium, it is nothing but 50%. So I will write it half into S minus H. Here S is standard hours and H is actual hours. If the standard hour, let us say, is 10 hour, okay, and time taken is 8 hours, that means he has saved 2 hours. So this S minus H is nothing but time saved divided by standard, okay, S minus H into R. So that means what proportion he is saving time, half of that he will be getting as a bonus. If you take the example of Halsey ware, very similar equation, only thing is instead of 1 by 2, here you have 1 by 3. That means one third of time saved employee will get. That means two-third benefit will go to the employer. This is the difference between Halsey premium and Halsey wear plan. Next is Rowan. What Rowan did, Rowan was very intelligent. He did, why I have to give third or half? What I will do with respect to the standard, whatever he is saving, I'll give him that and the remaining I will keep. So in this case, first he will have guaranteed time rate plus the time saved with respect to the standard, whatever it is, that will be given to the employee and the remaining will be retained by employer. So in this example, if 10 minus 8 is equal to 2 and standard is 10, so this will be only 1/5. So 1/5 will be going as a bonus and 4/5 will be for the employer. Next you have Bath variable sharing plan. Here R into square root of S into H. So this is a direct equation. You don't have to calculate any ratio. Just put in the rate and square root of standard and actual hours. You will get the bonus as per Bath variable sharing plan.